Hey, welcome to Ohio Real Estate. My name is Jason Ferrier, and I appreciate you joining me this afternoon, June the 6th. And it's our weekly Redfin update. I have a lot of data, a lot of info to share with you guys today. And if this is, if you're new to my channel or these Redfin updates, this is basically our chance to review the latest and greatest housing market updates and information from redfin.com. So every week, Redfin puts out an update, and it's a weekly update. So they're really keeping our fingers on the pulse of the housing market as much as possible. Now, not all data is, perfect. There's no doubt about that. And real estate is very localized. So down to a street level, probably. And, being in the real estate business as an agent here just outside of Columbus, Ohio, and an investor, um, I know what's happening in the local real estate market, but today is our chance to look at a national picture. So, take this information with a grain of salt, right? You need to localize your information, but at the same time, this gives us an idea of, hey, what is happening out there, on a national level, and the trends can kind of lead us down the road as to, will prices continue to go up, or will they correct? And it's just a good time for us to interact with each other. So before I get started, though, please do me a favor if you haven't already, subscribe to my channel. Really appreciate it, and I put a ton of work into this channel, and just past 500 subs. So woohoo! Look at me. But anyway, it's really not that big of a deal. But if you have subscribed already, thank you. If you haven't, please subscribe. Greatly appreciate it. Hit the like button and comment. I want to hear from you as to what's happening in your local market, on your street. Are houses selling quickly? Are they, sitting on the market a long time? And be honest, what I'm not hearing from people, I'm not hearing anybody tell me this. So please tell me this. If this is you, if you're seeing this, are you seeing house prices? Are you seeing houses priced under the median in your area? So under the median price, or affordable houses? Are you seeing those sit a long time? So in other words, what I'm specifically asking, it's an assignment. If you're out there listening to this live or on the replay, go into your market, or as you drive around, come back and report to us. Are you seeing affordable houses sit on the market a long time? And you know what affordable is. So if your normal house prices in your neighborhood are, let's say, $400,000, and you see something priced under 400 grand and it's in good shape, it's not destroyed, it's not an auction, it's not a foreclosure, it's an actual listing. Are you seeing those sit on the market a long time? My suspicion is you're not, but prove me wrong, because here in Columbus and central Ohio, many areas of Ohio, we're not seeing that. We're seeing more expensive houses sit longer, but affordable houses that are in great condition, especially those that are FHA ready, or FHA, they'll pass FHA tests and inspections and VA inspections. Those are not sitting, those are moving quickly. So is that you? I want to know. All right, let's get to the data. Here we go. I'll go ahead and share my screen. And so I'll go through some of this article, but not all of it. The name of this article, and this is the weekly Redfin update, the link's in my description below. Home prices, they are falling in 3 Texas metros and Portland as high rates cool demand for the former hotspots. So I guess there's 3 areas in Texas and Portland, Oregon, out of the top 50 metros in the United States that are seeing year-over-year price decline. Finally, there are a couple spots that are seeing price decline. But you'll see why in a minute, in a couple minutes here, why the housing market crash, or any sign of a crash, has been canceled by basically a lack of affordable inventory. That's what it comes down to. So the article goes, prices are down 3% in Austin, Texas, more than any other metro, as near record housing costs push many home buyers away. Nationwide price drops are at their highest level since November 2022, suggesting more metros may soon see price decline. Home sale prices are declining year over year in 4 major metros across the United States: Texas, Austin, San Antonio, Fort Worth or Dallas, basically the same place, and Portland, Oregon. The last time prices fell in 4 or more metros was in January. Yikes. Nationwide prices rose 4.4% from a year earlier to an all-time high during the 4 weeks ending June 2nd. But there are early indicators that the national price growth could soften soon. 6.4% of US home sellers cut their asking price, the highest share since November 2022. And the typical active listing has been on the market for 46 days, up 2.3% year over year, the biggest increase in 9 months, suggesting home listings are growing stale faster than they were a year ago. Yeah, days on market, that's a key indicator. You want to look at that in your local market if you're wanting to find a deal or wanting to make an offer that's, less than the asking price. Look at the days on market. And if days on market climbs in your price category, in your area, in your metro you're looking in, down to the subdivision or street level, that could be an indicator that prices could start to soften. Um, However, if days on market drops or remains low, like it is in most metros right now, um, you're definitely going to see prices sticky or even increase. Some listings are growing stale because higher mortgage rates and housing costs are causing would-be buyers to back off. The weekly average mortgage rate rose back above 7% last week, pushing the median U.S. housing payment near a record high at $2,838. Now, mortgage rates have come down a little. They're like rate over 7%. I think they were 7.03 according to Mortgage News Daily when I checked this morning. So check this out. Pending home sales, they fell 3.8% year over year. That's the biggest decline in 3 months. And mortgage purchase applications declined 4% week over week. So I titled this video, Housing Market Crash Canceled, or not crashing, reasons why it's not crashing. And this is exactly why, folks, because the monthly mortgage payments are outrageous. People are not listing their homes as much as they usually do in the spring. So there's a constrained amount of inventory, and mortgage purchase applications are declining week over week. And they've just been horrible this year. So the market's just kind of locked up. And since it's locked up, there's no inventory to buy and, relieve some of these buyers that actually need prices to come down. So we need more inventory of affordable homes specifically, not expensive homes. We have that. Need affordable homes. Inventory's losing momentum too, which is another reason sales are falling. New listings posted one of their smallest year-over-year increases since February, with high mortgage rates discouraging homeowners from selling because it would mean giving up their low rate and trying to offload their home in a relatively slow market. Interesting. There's no getting around the fact that it's expensive to buy a home right now, but some people are having luck negotiating with sellers, said Bonnie Phillips, a Redfin premier agent in Cleveland. Hey, an Ohio mention on there. Haven't seen that before. I've seen buyers get a home under asking price when it's been on the market for a few weeks. There you go, days on market, right? That's especially true when their agent presents market data that supports a lower market value, like comps of similar homes nearby that have sold for less or fewer than usual online views or tours. Other buyers are finding creative ways to afford a home, like buying a duplex, living in one unit, and renting out the other. Holy Toledo, someone said it. Unreal. That right there, folks, like this statement right here is maybe what you have to do if you're looking for a house but can't afford one. And this is actually, if I could go back in time, if I could rewind time, this is how I would get into real estate. I would buy a duplex, a triplex, or a quad. I would live in one unit, and then I would rent out the other units, whether that be the one on one side, and then on the triplex, you got two, and on the quad, obviously, there's three other units. I would rent those out to make the mortgage payment. And then once I had the building stabilized and one side rented and my side fixed up, I would leave. I would buy another one. I would rent one side, live in another, And I would keep doing that because when you live in a duplex, a triplex, or a quad, or even a single family house, even if you know, well, specifically, I guess a duplex, triplex, or quad, if you live in one of those buildings and you rent out the other units, you're not treated as an investor by the bank. You're treated as a homeowner. Now, if you can't go over 4 units, you go over to, you can't do like an apartment building, like of like you can't do like 10 units or a complex of like 40 units. You can't live in one apartment and get the benefit of home ownership. But the banks will look at it differently as you get a better rate. So they look at it differently as a homeowner versus an investor. And you're taxed differently as living in the property. And it's a fantastic way to get into real estate, to get a home to live in, and to build wealth in the future. So this is absolutely what I'm encouraging people to do, bar none, especially like first time home buyers. The problem is no one wants to do that. People just want a single family house. It's like move-in ready, granite countertops, stainless steel appliances, nice floors, nice paint, nice yard. But those aren't out there right now, at least not affordable ones. All right, leading indicators. Daily average 30-year fixed mortgage rate, 7.03% June 5th, up slightly from 6.99%, but down from a 5-month high of 7.52% 5 weeks earlier. The weekly rate, 7.03. Mortgage purchase applications declined 4% from a week earlier. They're down 13% year over year. People are not buying homes, mainly because they're not selling their current home that they live in, and or they just can't afford the payments on, decent houses in good areas that are, in good shape. Redfin Home Buyer Demand Index. It's essentially unchanged from a month earlier, down 13% year over year. Touring activity up 23% from the start of the year. I don't really know how that helps us. I guess last year it was up 10%, so it's up 13% year over year, I suppose. Google searches for homes unchanged. It's been unchanged for like weeks, down 18% year over year. Key housing market data. So they take the top 400 US metros and look for this data. Just the top 400 metros. Median sale price now $392,200. $392,000. That's a year over year increase of 4.4%. That's an all-time high, they're saying. Median asking price, $417,000. I've got an amazing thing to show you here in a minute on median asking price. I pulled some raw data. Heck, let's just show it right now. I did this this afternoon. I put this together. And this is let me make sure my picture's on the way. No, it's not. This is the median asking price of homes in the United States. And I want you to look at where it was in January or February of 2021, where it is now, 428,000. So this is according to Redfin's latest data, median asking price or median list price. So it started at about $320,000 way back in early 2021. And basically every season it goes up and down, right? So you can see through the fall of 2021, it was kind of steady. Then it went up as we went to the spring home buying season in 22. Then it went down somewhat as we went to the winter and the fall and winter, and then went up again in spring, and then down again, and then up. But it landed at now $428,000 as of June 2nd. So the point of this is that this shows how many listings are out there that are priced higher versus listings that are affordable. And that's what's driving a lot of these numbers, right? You have more expensive homes listed and available, less affordable homes listed. Again, I want to know, because I hear people on YouTube, people I follow on YouTube mention And specifically, I'll mention him, real estate mindset, and Travis. I hear him say it all the time that more expensive homes are selling, less affordable homes are selling. But what he doesn't mention, and I don't know why, is that there are fewer affordable homes even listed. So it's not that there are affordable homes listed all over the place, like, deals that you just can't believe, like a starter house, uh, priced at 200 grand that's move in ready and nobody's buying it. People are just walking past it. Not happening. At least it's not in my area. So I want to know, is that happening with you? Are you seeing um, houses that are affordable just sit on the market and just collect mothballs? No, I don't think you are. So because of the fact there are less affordable listings out there and the expensive homes are dominating the active listings, when one does sell, the median price generally is going to go up because the median asking price is going up. I mean, you can see it right here, right? 428 grand. So it continues to go up over the last 4 years because the affordable inventory has continually dwindled. It's just gone down and down and down and down. If one does hit the market, people are ready to buy it either for themselves or as an investment. So, again, I want to know, tell me what's going on. Are you seeing affordable homes rot? I don't think you are, but prove me wrong. Hmm. Okay. Let's go back to the leading indicators. So, median asking price 417, 274, up 5.9%. So this doesn't necessarily mean people are just asking more for their affordable houses, though it could be that. It's based on the data I see, it's the affordable homes, they're just non-existent. There's just less affordable homes on the market. And then because of that, less affordable homes are selling. So lower price homes aren't selling as much, but it's because of inventory, not because people don't want them. Median monthly mortgage payment, $2,836. Crazy high, right? Pending sales, 86,000 units, down 3.8%. Biggest decline in over 3 months. So pending sales are just down because, again, less good inventory, more bad inventory, less sales. New listings, 98,000, but it's the smallest increase in over 4 months. The smallest increase in over 4 months. So not not helping us there. Active listings, 923,000, a 15% increase year over year. I'm going to show you something right now with active listings. Check this out. So this is my market. Now, I can only pull this from my market because I have access to the MLS. And this information is from the Columbus Board of Realtors. That's where I downloaded the information. I'm giving them credit for the data. But Central Ohio active listings. Now look at this. Look at that right there. Under $300,000. We're up 8% in active listings year to date. Over $300,000, we're up 26%. So, many more active listings over 300 grand in my market. Many more. Now, let's look at this. Look at over 500 grand. Now, the median price in my market, it's like 345 grand according to Redfin. So now look at this. Active listings, 500 grand and over. Up 13%, under 500 grand, up 35%, over 500 grand. Again, more expensive houses are dominating the listings. Now look at new listings. Under 300 grand. Let this sink in, folks. This is spring selling season. Under 300 grand. 0% increase year over year in new listings. Over 300 grand, 13% increase in new listings. So it's easy to see based on that local data that, again, with this active listing number of 923,000, you got to understand what makes up that 923,000. Is it $1 million homes that people just try to put on the market because they're like, oh, I bought it at 800. I want to see if, it's $1 million, if I can get $1 million for it. I can tell you very close to where I live, there are some houses that have just hit the market that 2 years ago traded at 800 grand, 900 grand. Now they're at 1.2. They may sell quickly, but they may not. But if that was a starter home, it would have been gone before it even sniffed the market. New listings, 98,000 new listings. We talked about that. Active listings, months of supply, 3.2 months of supply. 4 to 5 months is considered balanced. I don't know if we'll hit that or not. Again, months of supply only matters if you look at the data behind it and understand what is listed. Share of homes off the market in 2 weeks, 43.4%, down from 48%. So homes are sitting longer. They are. Homes are sitting longer in general because a lot of them are overpriced, expensive, in bad areas, need a lot of work. Median days on market, 3 days. 3 days up. 32 days total is median days on market. So basically, homes are, they're taking longer to sell. Share of homes sold above list price, 32%, down from 34%. So people are paying less. They're not paying, how about this? They're giving sellers less of what they're asking for. Because now look at this. Share of homes with price drop 6.4%, up 2 points. Average sale to list price ratio, 99.6. That's down 0.2 points. So sellers are basically getting what they're asking. But in some situations, there are some deals. That lady in Cleveland, the agent, who was mentioned in the article in Cleveland, she said, hey, she's seen some buyers get some discounts from sellers when the house has been on the market a little while. I'd love to know what price point that's in. She didn't say. All right, now it's time for metro level data. This is the top 50 metros only analyzed. It's not 400. Median sale price increased the most in Anaheim, Nassau County, New York, New Jersey, Newark, New Jersey, Cleveland, Ohio, Oakland, California. That's where it increased the most. Austin, San Antonio, Fort Worth, and Portland had the biggest year-over-year decreases. The notes say decreased in 4 metros out of 50. So not a lot of metros decreased in median price. Pending sales rose the most in San Jose, Anaheim, Columbus, where I am, San Diego, and San Francisco. They dropped the most in Houston, West Palm Beach, Atlanta, Fort Lauderdale, and Virginia Beach. Pending sales actually increased in 14 of the top 50 metros. New listings. They rose the most in San Jose, Phoenix, San Diego, Denver, Las Vegas. And they dropped the most in Atlanta, Chicago, Minneapolis, Newark, New Jersey, and Portland, Oregon. So new listings decreased in 10 of the top 50 metros. All right, now it's time for the charts. But I'm probably going to go to the actual usable chart. So this is the chart that you can actually. What's going on? Let's see what happens. Yeah, so this is the weekly Redfin data sets in visualization in chart form. This is much more intuitive, in my opinion, than just the static charts that they have. So we're going to go ahead and use this. Let's start with, we can start with new listings. That's fine. And I'm going to make this bigger. Let me just check my picture there. Let me go down to this. 1 second. All right. So new listing time. Yeah, I mean, the article mentioned it, right? New listings, 98,000 new listings over the last 4 weeks, but that's only up 6.9%. It's actually dangerously close to coming underneath last year. Again, the market is not going to crash because, at least not yet, there's just no activity to crash it. There's nobody listing their houses. So, like, you can't crash if there's no things to crash, right? If there's nothing to crash into each other, there's no crashing. It's just the way it is. I don't know what to say. I know people want to crash, but wanting and reality are two different things, obviously. So new listings, just not impressive. All right, let's look at homes sold. No, 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 no. Pending sales. So pending sales down 3.8%. Again, no activity. There's just no activity out there. So, house goes into contract. That's a pending sale. That's down compared to last year. It's not really getting any better. It's still pathetic. Remember, these are national numbers. By the way, if you have a metro you want me to analyze, mention it in the comments. Send me an email. You can even call me. My data or my information's in the descriptions always. So reach out. Let me know if you want me to analyze a metro on the next live. Let's look at homes sold. Look at homes sold. It like was trying to get over last year, but now it's like just under last year. They don't report this in the leading indicators. Why I don't know. Um, but homes sold 75,000. Right? Not that many. It's just pathetic. It's not good. If you're in the mortgage business, in the title business, in the real estate business for transactions, if you're a transaction person, meaning obviously with agents and all the other folks, you get paid when the thing closes. If it doesn't close, if there's no sales, you're not getting paid. So not a lot of selling going on. Let's do median sale price. Everybody wants to know this, right? $392,000. Just not impressive, right? Not impressive if you're a buyer out there wanting to buy something. And even me as an investor, as a realtor, people think, oh, realtors and investors, they want prices to go up all the time. Wrong, 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 wrong. I want a stable, easy market. When I got into this business, which wasn't that long ago, it was only like 7 years ago, prices and um, days on market was normal. So you could easily find something and take a breath. And, you had 30 days to sell a property. Usually even good properties, could sit 20, 30, sometimes 40 days. But it was a much more normalized market. But now it's just nuts. And median sale price continues to go up. Active listings. Let's look at that. Look at this. 923,000, up 15%. But like I said, that's not helping because a lot of that stuff isn't affordable housing. And it's like headed this way. It's headed down. Um, it's not spiking up. And so people just don't have incentive to sell. They just don't. I talk to people every week as a realtor that are like, man, I'm just not going to sell yet, Jason. I'm not going to. I'm going to wait until rates come down. Most of them are saying I'm going to wait till rates come down because they want to buy something else. They're not just like, oh, I can't afford to sell. They're like, I need rates to come down so I can buy the next house. So it's inventory is just not good. Let's look at price drops. Percent of active listings with price drops is actually going up. It has for a while. It's up 2% year over year. 6.4% of all listings have price drops. Again, I think there's a lot of houses on the market right now that are people don't want, and so they have to keep dropping that price. Or maybe they just got greedy and priced the house too high to begin with. Comment below. I want to know, do you see houses in your area sitting and having price drops? I do. They're not affordable houses. They're like $1 million houses. So they go from like $1,200,000 to $1,150,000. Whoop-de-doo. It's still something I'm not going to buy. Age of inventory. So this is how long it sits on the market on average. It's 46 days. Age of inventory, 46 days. So, back in 2022 at this time, that was 30 days. But now it's 46. So houses in general are sitting longer, which is good. Months of supply. They call it weeks of supply, months of supply, same diff, right? I mean, it's gone up a little bit week to week, but overall this spring it's just gone down. So again, you have to see this go up significantly to see any type of price destruction or crash, right? Just how it is. Average sale to list price ratio, 99.6%. Lower than the last 3 years. That's good, right? So people aren't overpaying for houses. They're not paying way over asking. But look at it back in 2022, that number was at 102%. Actually, 103%, which is that's a big difference. So back in 2022, on average, people were paying 103% of the asking price. Let's see. Let me look at one more data set here. Let's do, I don't think we did this one yet. Off the market in 2 weeks or less as a percentage of sales, down 2.7%. This is definitely headed down. It always does this time of year. Um, or I'm sorry, it usually does when fall hits, and you can see the trend from the other years. It's gone down. It looks like it peaked maybe back here at some point, 52.2. So over half the listings were off the market in 2 weeks or less back in 2022. Now homes are off the market on average. The percent of homes off the market in 2 weeks or less, 41%. So, there's still 40% of homes selling or off the market in 2 weeks or less. It's still a fast market, in my opinion, if the home's priced right and it's a good home, right? It's not one that needs, roofs and windows and foundations and all that jazz. Okay. So that's data visualization. Now we're going to go to the Columbus area now. I always do this after the national data. And then if anybody has a metro they want me to analyze, I'm happy to do it. All right, so this is Columbus, Ohio. We'll start with off market in 2 weeks or less. Just like national numbers, that's down. Percent off the market in 2 weeks or less is only 23%. That's surprising. Wow, that's 40% nationally. Only 23% here in Columbus. I'm surprised. Hmm. All right. Let's look at some inventory. New listings in Columbus, Ohio. Look at that. Unbelievable. I knew this was going to happen. Look, down 3.2%. I'm sorry, up 3.2%, but down week over week. We had 710 a week ago as the update, and now we're down to 675. It's just not good. We just don't have the inventory here at all. It's really bad compared to national numbers even. I mean, look at this. We're only up 12% year over year, and you saw the numbers, right? You saw me bring up the chart on, hey, where are the listings? What price point are the listings at? Well, they're over the median. So we're not growing affordable listings at all. And I don't think we will, because there's people lined up with cash ready to buy. Not only homeowners, but investors, tons of investors that I know have buckets of cash, and they're just waiting for affordable homes to hit the market and then snatching them up. I mean, five, I've got five or six right now, buyer clients that are from other areas of the United States that call me and message me all the time and say, "Hey, do you have," and I have some that are local too. "Do you have anything, or do you see anything that's like in good schools that we can make a run at and will cash flow somewhat, even with like a 40% down on a DSCR loan? Will you actually, will it cash flow? If you find those, I want to buy them, and I'm willing to pay over asking even." So people are out there hunting for affordable housing, and they have money. So that's not fun for buyers. So active listings not doing well. Let's look at median sale price. I'm going to guess. I haven't looked at this yet, but I'm guessing it's 348, 345. All right. Just fantastic. So we went from 342 last update to $345,000 on this update. It just keeps going. It just is. Um, not good. Let's look at um, pending sales. Pending sales year over year up 7%, but it's dropping. Homes sold. We started to go up. I thought we were going to have some breakaway activity, maybe some more movement in the market, but we're really not. Only up 1.8% year over year. So people, because of the inventory, people are buying and selling, and that inventory problem is caused by rates and affordability. It's kind of like a vicious cycle. Months of supply. Again, this is just for Columbus. I already did national. So this is just for Columbus metro area. Weeks of supply, 9.2. I mean, it's just barely over. It's like what, 2.5 or so, 2.5 months of supply. So it's still a seller's market. Anything under uh, 4 is definitely a seller's market. And if you're under 3, in my opinion, then it's a strong seller's market. So we're in a strong seller's market still. It's just really, really unhealthy, folks. Very, very unhealthy. Let's look at median price list. New listing median price up 4%, $355,000. So the median price in our area is 345. So the fact that median listing price at 355 is not that far off. Okay. We do this age of inventory. No, we didn't do this. This is how long it's sitting on the market on average, how long houses are, 29 days. In Columbus, just 29 days. Year over year, that's an increase of 2.5%. So let me check. Nobody wants to see a specific metro. So I'm going to do this. I'm going to go to a couple other nuggets of info. You know what? I'm going to do this. All right. So one of the metros out there that's a big problem is Austin, right? We saw that price drop. So let's look at Austin, Texas. Let's see what's happening there. Let's look at the median sale price in Austin. Wow, look at that. It actually held pretty steady, right? I mean, you can see the orange line there down like let's see. Let me pull out 2021. Make it a little clearer. Yeah, so this is just, let me pull out 2022 as well. So this is Austin, Texas now. Wow, look at that drop. Woo! Way down. 455,000 now is the median price in Austin, Texas, down 3% year over year. It dropped fast, right? Really fast. Pretty surprising. Well, not surprising. They do have a lot of new construction, I hear. I haven't been there in a long time. It's been years since I've been to Austin. But let's look at active listings in Austin. Holy cow, look at that in Austin. Jeez. Up 16% year over year. I thought it'd be up more, but it's really not. All right, let's look at the new listings in Austin. New listings up 8% year over year, but look at it dropping now. It's kind of doing its drop just like it did. It's doing that in a lot of areas, even nationally. Pending sales in Austin down. So maybe it's more expensive homes like it is in a lot of other areas of the country, right? A lot of more expensive homes and not a lot of affordable homes. Homes sold, that's actually holding steady. Although it's still down 8.9% compared to last year, it's not going the trajectory is not down, the trajectory is actually up. I'd love to know if somebody lives in Austin, what's happening there. Let's look at another metro here. Let's do San Jose. San Jose, California. Homes sold up 18% year over year. Wow. That's an anomaly. We haven't been seeing that, right? Most places it's down. Let's look at new listings in San Jose. Wow, look at new listings up 39%. Wow. 39%. Jeez. Active listings in San Jose. Goodness gracious, 23% year over year increase. A lot of homes available out there. Let's look at homes sold. Yeah, homes sold is up 18%. We just looked at that. So that's awesome. Let's look at median sale price. Man, look at this upward trend here. Jeez. Median sale price in Austin, $1,657,000, up 13% year over year. Man, people were just throwing down cash out there. Months of supply in San Jose. Weeks of supply, 6. That's 2 months. Or what's that? A little over, I guess, a little over a month of supply. That's it. Jeez. At their sales pace, because the sales rate is actually up pretty much. Right? It's up a lot, right? It was up 18%, I think, year over year. So weeks of supply is going to suffer because people are buying just as fast as stuff's hitting the market. Wow. All right, let's look at I want to look at Boise, Idaho. Now, Boise, one thing about Boise is that um, a lot of people think this area was going to crash or is crashing now, I guess, because of new construction. But I'm looking right now, weeks of supply 9.7. So that's like little over 2 months of supply, not a ton. Let's look at let's go back here and look at new listings. This is Boise, Idaho. 295 new listings, down 11%. Huh. So I'm curious to see if it's going to crash. I mean, is the crash canceled in Boise, Idaho? Let's look at active listings. 2,684 active listings year over year, down 13%. Well, I don't see how you can have a crash where active listings are down year over year and new listings are down year over year. Maybe you're just going to crash with houses not listed, right? People would just I guess their values plummet when they're not even selling their house. I'm just kidding. That can't happen. Look at the median sale price up 4%, but look where it's gone this year. I mean, it started by the median sale price $455,000 back at the beginning of the year. Now it's $497,000 in Boise, Idaho. Crash canceled. Man, that's a rough area. Jeez. All right. Let me pick another one here. People are talking about Florida crashing. So let's look at Miami. Median sale price in Miami. It has dropped a little. Now it's $545,000. What kind of house can you buy in Miami for 545 grand? They were at $559,000, way over last year. Now they've dropped a little. Let's find out if active inventory is up. New listings, 15% year over year up. Okay. A lot of those are probably $1 million homes. But look at active listings now. It's definitely up 24% year over year, but it's now starting to drop, not go up. Months of supply in Miami. Okay, now it's going up, but you're at, wow, weeks of supply, 27 weeks of supply. Geez. That's like almost 7 months of supply. Man, I'd love to know. Let's find out. What's the lead? Let's look at the median listing price. Listing median price. Huh. Listing median price $590,000. So maybe there are affordable homes there, or relatively affordable homes, depending on where you're from. I'd love to know in Florida what's happening. If you live in Florida, let me know. You seen a lot of price drops? Are you seeing good homes sit on the market a long time? Maybe you are. That's a lot of inventory. That's definitely a lot of inventory. Man, nuts. All right. So I know that um, one area that I was paying attention to was Hartford, Connecticut, or the Connecticut area. I saw an article from Resi Club saying this is like the tightest area in the United States is like the Northeast. So let's look at this. Median sale price, new listing median price is $379,000, up 16%. Let's look at the median sale price. $352,000. I can't believe Columbus is almost as expensive as Hartford, Connecticut. That's nuts. Up 5% year over year. Let's look at new listings. Wow, look at new listings way down compared to last year, down 14% compared to last year in Hartford, Connecticut. Active listings year over year down 12% in active listings. Jeez. Weeks of supply, 8.2, basically 2 months of supply approximately. That's not getting any better. Huh, interesting. Okay. Well, that was fun. It's just unaffordable. It's unaffordable, and there's just no supply in a lot of these areas. That's just how it is. It's just how it is. Now, last thing for you, this is more of just a general question, comment, whatever you want. Um, so I put polls out on my YouTube page, and I appreciate if you participate because people do. And the question I asked was, what what's your trusted source for real estate data? And the available answers I had on the poll were Redfin, Zillow, local MLS, or your gut as the trusted source of real estate data. Um, After all the voting was in, your gut won. So people in general are using their gut for real estate data. Now, maybe they're kidding around because the question was kind of strange, I suppose. But at the end of the day, you can't really use your gut. You got to use data, right? You got to use data. So, anyway, thank you for joining me today. I'm done with my Redfin update. We did Columbus, we did Austin. That was strange, right? We did Boise. That's out of control. We did Miami. We did Hartford, Connecticut. So if you have an area of the United States you want me to analyze, please put it in the comments. I'm happy to do it, especially if you live in Ohio. I can dive into a much more granular level because I do have a lot of Ohio data. But in any case, thanks for joining me today. Like, subscribe. I'm going to see you next week on my Redfin update.